Hello, welcome to Easy Forex Strategy. In this video, I want to show you an advanced supply and demand trading. And before we begin with this video, I want to tell you that this video is not going to be a beginner friendly. So if you didn't watch some of the videos in this channel, this video will be difficult for you to understand. But I'll try to go over the basics that we have touched before we can go throughout with this video. In this video, I'll also include I think 2 examples when we move forward, but I'll try to show you some basics of this trading strategy. And also, if you like this video, give it a like and also give us a subscribe, because this video is going to help you if you don't have any trading strategy. This will also get you started to start having at least one strategy that you can start using into your trading. And another thing is that we will also go over the basics of trading, and I'll also try to at least remind you of the things that we did before, because this will also be helpful when we move forward throughout this video. So let's begin with the first step of this video. The first thing that you need to know already is how to draw supply and demand zones. Okay, so if you don't know how to draw supply and demand zones, this video can be a little bit challenging, but I think if you go and watch the video before this one, I'll also put it in the description below. It will clear some of the things that you need to understand throughout this whole video here. So from here, the first way of doing supply and demand zones, this will be your demand, because on demand we buy and then on supply we sell. So from here, this is the first step of drawing your supply and demand zones. On the first one, we can draw from the previous candle to the low here. If you don't understand, we draw from this area to the low. So if it happens that this candle here is the one with a lower low, that means, like for example, if this candle was having a wick like this, that means the zone will end here. And then another way of drawing a supply and demand zone is from the high of the previous candle to the low here. It's the same thing as I said before. Like for example, if we had something like this, that means the zone right now will end around here. But this time we are drawing the zone starting from this high here. But this one is a little bit risky. This one is a little bit risky, and then this one is less risky. Okay, and then if you understand everything from here, then I guess we can move on to the next section of the video. And to remind you all, this low here is where we will put our stop loss. This is called an invalidation level, and for me to call this an invalidation level is that we don't want to see price trading below this low here without confirming first. Okay, I think right now we can move on to the next section of this video. I am just reminding you of everything, because everything that we are going to do in this lesson, everything here will be very important. But if you don't understand it clearly, and if you didn't backtest, this video might be a little bit challenging, because I'm going to move a little bit faster so that this video cannot be very long. But if you want a long format of this video, please comment below so that we can so that I can produce it in the near future, or maybe in several days. So from here, let me explain this one. We can see that right now we have a zone, we have a low and invalidation level around here, and then we have some bearish candles before a confirmation candle. This candle here is a confirmation candle, and we can also see that price never traded below this low here. But the only 2 things that is different from this one and this one is this candlestick right here, this confirmation candle here. So this confirmation candle, we can see that in this section here we have a bullish engulfing candle, but on this one here, this is not a bullish engulfing candle. So by doing this, the only difference is that this candle here, when this next candle appear, it likes to come and retest this low here, I mean this open of this previous bearish candle here. And on this one here, it doesn't come and retest here, it come and retest this candlesticks low, this candlesticks open. I can also repeat that again so that everybody can understand. The candlestick that is confirming inside our zone, if it's not an engulfing candle, the next candle is likely to come and retest the open of the confirmation candle. But if the market closes with an engulfing candle, the market is likely to come and retest the candle before a confirmation candle on the open. Okay, this is the open of the bearish candle, this is the close, and then this is the open of a bullish candle, and then this is the close. Okay, I hope we understand each other right here. So let's move on to the next section of the video. If you don't understand this, I will put the video in the description below so that you can watch it and understand this even further. So let's move on. From here, things will start to be a little bit difficult for some of you, because I noticed some of you have been trading this supply and demand without any solid analysis or any strategy. So but this video, I want to give you one strategy so that you can start to use into your trading style. So on the higher time frame, you will see a zone around here. Let's say we have a zone like this, okay, and then the market is moving towards this zone. When the market touches this zone here, move to the lower time frame without even confirming this higher time frame. This is a little bit different. Okay, on the higher time frame we don't confirm, but if price keeps pushing higher above this, that means this analysis will be invalidated. So we will be looking like to enter the market early, and then let's say maybe the entry is triggered in this area, and then we have a low here, because I have noticed some of you don't even have a take profit level. We have entered the market here in the lower time frame, and then we have a low here. That means your take profit will be this low here, this previous low here. Okay, so let's move on. I want to explain everything on the, again guys, before we move on the higher time frame here, let's say maybe we are on the 4 hours. We have a low here, and the market is trying to come to that zone again. So in this area here is where we will move to the lower time frame and see if there's a possibility to get into the market. So from here guys, what we need to do is in the lower time frame, when we move to the lower time frame, we need to find a zone here that has been invalidated, meaning we are looking to sell here. So anything that comes to this area, even if it confirms, we don't buy. We just wait for the market to invalidate this zone here, and after invalidating this zone here is then we can start to look for another zone around these areas here so that we can look to sell. I am going to repeat that again so that everybody can understand. And another thing that can be a little bit confusing is that, let's say this is the 4 hours time frame. This is the 4 hours time frame. Your lower time frame will be the 15 minutes, the 5 minutes, 3 minutes, even the 1 minute time frame. And the market will also tell you if anything is happening before we can try to enter the market, because you have to look for these two things here before you can enter the market. Your entry should be around this area here and targeting the higher time frame low. I hope you understand right there. So that means in this lower time frame, your entry will look something like this, but on this side here you will realize that your entry will be like something like this with a smaller stop loss, because we are trying to enter the market in the higher time frame but using the lower time frame as our entry time frame. So this will also like reduce you from taking more unnecessary trades in the market. So I will just try to give you a couple of more examples so that we can you can start to backtest it. Okay, step 1, look for higher time frame zones. Step 2, move on to the lower time frame, find an invalidated supply or demand zone. It depends on where you are trying to buy or sell. And then after you have seen that you have a filled demand zone here, that means in the lower time frame you will start to look to sell. So let's move on to another section. So before we begin with this video guys, you have to at least backtest this, at least do like 10 examples or more per day. This will also help you like to be able to spot those zones and analysis very fast. If you don't do that, who's going to give you like those analysis? Because your trading account is your only trading account. Nobody's going to trade for you unless if you have someone who trades for you. But you have to learn, why did you start to trade if you are going to let someone trade for you? It doesn't even make any sense. And another thing is that never risk because you saw one insane result. I know some of you like will make $150 from $20 account. Then on the next trade they will do the same thing, like they will go full margin this time. So if you do this, you are likely to blow your account, and you will cry like a lot. So never be this trader, guys. Never be this kind of trader. Avoid it at all cost. And lastly, always protect your capital or your trading account with a stop loss. This will save you from blowing your trading account. If you start to learn if you learn this, you will always be scared like to deposit money into your trading account, because I know some of you have been depositing for years and years, but there is nothing that they have achieved yet. They have never made a single withdrawal at all. They always blow their accounts. But I have seen some of your comments that some of you have already withdrawn money, so I appreciate that every day. So that is why I keep sharing this information, to keep helping you a lot. So let's move on to a real chart so that we can do at least 2 examples or 1 or so, because I want to keep this video very short. So before we move on, I want to tell you that because I have noticed some of your comments have been asking, does this work on other markets? Yes, it works on Forex, cryptocurrencies, indices, and even more. Even the synthetics, it works. So that's a checkbox for us. And some of you have been asking for which time frame. It all depends. It works on all time frames. As long as the market is showing you like perfect setups, just trade it with 1%, then you're good to go. So right now I want to show you one example so that everything can be clear. This is the I'm not going to do a rewind because it's going to take me a lot of time. This is the 4 hours time frame on gold. Okay, let's say right now you have a zone like this. Like as I said before, you can draw your zone starting from this high here. Let me zoom in a little bit. You can start the zone from this high, or you can also start to draw the zone from this open here. And we can see that this bullish candle doesn't even have a low, so that's good for us. But if you did something like this, that means you will be waiting for the market to come and touch here, but which it never did. So you can also like do something like this, put a line here to note that this is the first starting point of the zone, and then this will be let me just do it. So from here we can see that we have the starting point, which is here at the high, and then we can draw the zone on the open, and then this is the end point, which is also our invalidation level, meaning we don't want to see price trading below this zone here. And I'll try to show you some of the things here, what happened here from this example. Let me remove everything so that I can explain slowly. We have something like this here. So right now let's move on to the lower time frame and because we can see that the market touched the starting point of the zone, we can move on to the lower time frame to find that that invalidated supply zone in the lower time frame. So let's move on, because here this is your demand zone. Okay, so in the lower time frame we have to find something like this. Maybe let's say we have a zone around this area here. In the lower time frame, maybe it can be around here. In the lower time frame, you will have to find a zone around this area which has been invalidated. It can even be here. And then when we see something like that, we have to find some zones around here so we can look to go long. Okay, so from here you will have to find a zone that is being invalidated. Let me do something like this. And then in the lower time frame we have to find some zones, can be around here, and sometimes the market can even come to this area here, can come and bounce here. Sometimes it can even bounce like deeply. It will be something like this one here, which is not that, and this one will be a perfect example if I find it here, because I'm just doing it out of my head. So let's move on. So right now we are going to move on to the lower time frame. Let's move on to the maybe 5 minutes. Let's see this area. Right now we have to find that zone. So from this time frame we can see that right now we have the market touched the zone here, but the zones around these areas, I don't even like them at all. We can see that we are waiting for the market to break this one here, which it did after a very long time, and sometimes it can even break something like this and come to this zone here. Okay, but for me to take trades around this area, I don't even like them, but to be honest, I don't. So when we see the market breaks this, that means we have to find a setup which we still have around this area. We can see that we can start the zone from here. We have a zone here. Let me zoom in a little bit so that I can explain. We have a zone here. This is our demand zone. This is our demand zone over here, and then this is your bearish candle before a confirmation candle. Okay, then we can see that the market touched the zone with this bearish candle, then the market touched the zone. So the market touched the zone here. Let me zoom in a little bit. The market touched the zone with this candlestick, then the market closed bullish with this candle, which is also a confirmation candle. And like I said, as I said before, if the market closes on the zone, if the market closes on the zone with a candle that is not a bullish engulfing or a bearish engulfing candle, that means the market is likely to come and retest the open of the confirmation candle, and we can clearly see that from here. I hope you understand that very well, but I want to finish up this example on the lower time frame. Maybe we can see something that is clear. I will try to move on to the maybe at least 1 minute, because everything is not clear here. Let me move on to the 1 minute right now. 1 minute. This is where the market touched the zone here. Okay, let me remove this. The market touched the zone here. And remember guys, this level here is the starting point of the zone, and this one here is where on the open of the bearish candle where we drew the zone in the 4 hours time frame. But right now we are on the 1 minute, so the market touched here. So right now that means we have to find that zone. Let's look for it. We can see that we have a zone here. So right now we have to wait for the market to at least break this previous supply zone here. Let me mention it too. Okay, when the market touch the zone, check box. Okay, find a supply zone, wait for the market to break it, and then look for some zones around this area here. Okay, let's try to find some zones around this area. We can see that we have another one here, one here, one here, one here. But for something like this, we can incorporate a lot of things that let's find some spaces in these candlesticks. We will put some spaces on the wicks. If you can see on this one, let me make this one bigger. We can see from here we don't have any spaces here, so that means we're going to skip this one. Let's put another line here. You can see that we don't have any spaces between the wick and this candle. Even this one, we don't have spaces here. Even if I put it on this one here, we don't have any spaces. But let's look at this one. We have a space around this area here. Okay, this is a fair value gap. So from here, we can see that we don't have any spaces around this area here only. And we can also see that we have a zone. Okay, we have a zone here. So right now we have 4 check boxes. Okay, so we have this one here which the market touched the zone, and then we have number 2 here where the market must break this previous supply zone. We have a gap around this area which is number 3, and then we have a demand zone which is number 4, and then on number 5 we have to wait for the market to touch the zone. Or maybe we can say number 5, wait for the market, wait for a bearish candle before a confirmation candle. And then number 6 is your confirmation candle, and then is when you can enter the market. Let me just write it down so that everyone can follow these steps when they are trying to backtest. Yes, from here we can see that I wrote a lot of steps here, but it's fine. I think you can pause the video and take a screenshot around this area so that you can understand this part here. And I'll try to explain it again. The first one, wait for the market to touch the zone. The second one, draw a supply zone which needs to be broken, and then wait for the market. Number 3, wait for the market to break that supply zone, And don't forget, this is the 1 minute. The market will be fast, it will be on the screen, you won't miss this kind of thing. And number 4, find some fair value gaps here. You can just put your lines like this and find where the market has spaces between the wicks. And then number 5, draw the demand zone. After drawing the demand zone, wait for the market to come to the zone, which is number 6. You have to see a bearish candles before a confirmation. And then lastly, find a confirmation candle, which is this candle here. And we can also see that this candle is not a bullish engulfing candle. That means the market is likely to come and retest the open of the candle. So I will remove everything. I'll show you how the entry should look like. Okay, right now I have removed everything. I'll show you how the trade should look like. And from here we can also see the market touched the zone around this area. So what you need to do is wait for this candle to close, and then you can buy when the market is moving lower in this section. I know some of you might even miss it and enter here. It's fine, as long if you protect yourself with a stop loss. You will enter here, your stop loss at least below this low here, below this low. Also calculate your spread, guys. If your spread is like this, that means you're going to put this space below this stop loss, below this invalidation level here. So if your spread is wide, that means your stop loss will be this. But your take profit, I forgot to show you the take profit in the time frame. But target this highs here, can target this one. You can also target this one over here, and also this one here. If you have 30 entries, if you have like 1 to 30 entries, you can target those. Your trade should look something like this. This is 1:10, which is not bad at all. And you can also see the market even moved higher than expected. And this is the 1 minute. You'll be holding this trade the whole day, which is not bad. 1:27 on the second take profit, and then 1:37 on this one here. And by doing this, you can see that we have this high here, the 4-hour high, which you can also target to. Let's see, the market even touched it too. So this is how you should do it. Don't just use any supply and demand zone without any valid strategy. So this video, I was just trying to help you guys like to understand that you don't need to use supply and demand alone. So supply and demand alone will make you to fail as a trader. And another thing before I end this video, guys, if you have reached this the end of this video, like here, please consider subscribing, and please backtest and also comment your country flag in the comment section so that I can see that we have reached the end of this video. I want to see which countries are watching my videos the most, and so that we can engage in the comment section as traders, guys, because I am helping you, and in the future you might also help me, which is not a problem for me. I like learning new things, and I'm not also trading. I do other things apart, like programming and stuff. So if you have reached the end of this video, please give it a like, leave a comment, and stay safe, and also use a stop loss every day. Please use a stop loss before I eat you. Before I eat you, use a stop loss, bro. Use a stop loss, or else you will blow your account on Monday. When the market opens, you'll open a trade and the market will blow your account if you don't use a stop loss. Nah, I'm kidding, guys. I'll see you on the next one. Stay safe.